China's property sector remains under serious pressure and continues to weigh on the broader economy. Investment is falling, new construction is nosediving, and sales are still sliding. House prices are showing no signs of bottoming either, creating headwinds for consumption and industrial output. Now, if you want to understand why China's growth is slowing, this is the story to follow, not trade tensions with the United States. Property sector weakness remains the main drag on overall activity. Investment fell 12.9% in the first 8 months of the year relative to 2024. Construction starts dropped nearly 20%, and new sales fell 7%. All were steeper declines than a month earlier. House prices fell 0.3%, matching July's decrease, though the annual drop slowed to 2.5%. The weakness in the property sector continues to ripple across the broader economy. Retail sales rose just 3.4% in the year to August, down from 3.7% and below expectations. Industrial production also slowed to 5.2%, missing forecasts. Fixed asset investment, which measures spending on buildings, equipment, and structures, grew just 0.5% relative to the same period in 2024, the slowest pace on record outside of the pandemic. Private investment contracted 2.3% over the same period. With economic growth spluttering, credit demand remains understandably weak. New bank loans rose by 590 billion yuan in August, compared with forecasts of 800 billion. Outstanding loans rose 6.8% over the year, a record low. To underpin activity, Beijing continues to roll out incremental stimulus measures, such as subsidized loans to boost consumption. Over the weekend, officials announced plans to double battery production capacity by 2027. Authorities are also targeting overcapacity in factories through specific policies. For markets, the property slowdown makes China's equity rally even more important. Stock gains are helping to partially offset weakness in the property sector and support confidence. It's a delicate balancing act, with authorities trying to stabilize activity without overheating equities, leading to boom-bust scenarios as we've seen in the past. Investors will be watching closely to see if Beijing's measures are enough to keep growth on track for its 5% annual growth target.